Welcome. This is Ralph Bivins, and we're doing the Ralph Bivins Project. We're here with Wade Bowlin. He is head of the Avison Young office here, a major international commercial real estate firm in Houston. He's all over, but he's head of the Houston office, and he's quite an expert. He's been around with PM Realty Group, Madison Marquette, and he's a very knowledgeable source. So we appreciate you, Wade, taking time to be with us here.
Yeah, great to be here. Thanks for having me.
The vacancy rate of office buildings in Houston, it's reportedly at an all-time high. High, and so that's how would you describe the state of affairs in the Houston office market right now?
Well, you're right. We're at the all-time high on vacancy, but it's kind of an interesting statistic because if you look at our leasing volume, we're not that far off where we are historically. Our issue has been we've had a lot of volume, but the volume of the deals that we have, at least for the last couple of years since the pandemic, have been, reductions in space. So there might be a lease deal, but it's, a company going from 1 million feet to 500,000 square feet. Mm-hmm. So there's been quite a reduction in the size that office tenants are taking. And until we can get out of that, it's going to be difficult as far as vacancy. And I expect it to continue to go up some. There are some signs. There's been a couple of deals completed, one that we just did that was actually a net expansion. So it's a good sign that hopefully we're at the bottom and beginning to turn the corner. But until we see deals where there's actual expansion involved in it, we're going to be in for a little bit longer, tougher times.
I know one thing that's fresh, wrinkled has happened. That's pretty amazing, as people are talking about and considering taking office buildings that maybe obsolete, they might call them, and we can run. It may be a while before we're able to use this for office space, but what can we do differently with this structure? What can we do differently?
Yeah, there's almost, I guess, 290 million square feet of office product in the Houston, metroplex, and 11 million square feet of that is Class C, and then you've got another 87 million of it being Class B, and probably half of that, you're right, is probably going to be obsolete. Kind of a crazy statistic. Houston, we were pretty flat in office absorption, but we did 1.2 million feet in highly amenitized Class A office market. So the B and C was really negative 1.2 million square feet of absorption. So there are clearly buildings that are not going to lease as office buildings. And you're beginning to see future owners look at non-traditional ways of monetizing those assets and what are they going to do with them. And, I think that's still yet to be determined. But, some of the notable things that are happening, there's a group that just bought a complex out north that had a huge water supply. And reason they bought it was for Bitcoin mining, because of production. They estimate that the mining of Bitcoin in that one will be 30% more than traditional water sources. So, you're seeing things like that. I think you're beginning.
That's a surprise. I never would have thought of that. I still don't understand what Bitcoin mining is.
Hey, you're asking the wrong guy.
Imaginary currency, and don't even. How do you mine such a thing?
I'm a real estate guy. So I don't know the answer. Well, so that's one thing that's happening. We're starting to see grow farms, UV lighting in office buildings. If you can light it for 24 hours, your crops are going to be twice as good as 12 hours worth of sunlight on them. So, we're starting to see all kinds of different sources, and it'll be interesting to see how much that takes. But, another area that we're beginning to see is secure and classified document storage. You've heard a long time about
topic, isn't it?
Yeah.
Call your former presidents and say, we'll store your stuff for you.
Yeah, hopefully it's not them, but we've definitely seen some non-traditional looks, and then the one that I think that's been grabbing most of the headlines has been conversion from office to multifamily, and there's 3 or 4 notable projects that are in discussions to do that. Obviously Esperson has announced that they're going to convert a big portion of that building into multifamily or resi, whatever you want to call it. There's some rumblings about 800 Bell. Obviously, you wrote an article on that one as well too, with the new ownership group coming in there, and then 5555 San Felipe with a conversion as well there too. We're intimately involved with that one just simply because we manage that building. So they've spent a lot of time and effort in working on the conversion, and so I think the biggest hurdle to making that happen, I think, it probably is the multifamily rental rates really don't support a conversion right now. But by the time that anybody could get something done, we're estimating that they will be able to do that, and it may make sense to go ahead and do it even if the rental rates aren't there yet, because whatever rate you can lease it up, it's certainly better than to keep it where it is as an office building right now. 5555 San Felipe is a great office building, and it would lease up. It's just been the conversion of that market from larger tenants to more mid-sized tenants could take quite a long time to lease it up as an office building.
That used to be the Marathon Oil building, and then they
Right.
built another building out near City Center on the Katy Freeway, and so this building is there. And but there's still office tenants in 55.
Yes.
It's not vacant.
No, it's not vacant.
What kind of would this be, like a dual usage where you have?
I think all of that is to be decided. Yeah, there are leases that run in that building for another 3.5 years. So I think that they'll be evaluating whether they renew tenants in there, if they end up bifurcating it and it be a split use. I think all of those things are in the planning stages now, and will have to be worked out over time. 800 Bell's obviously a little bit different since the building is completely vacant in there. That was the former Exxon Mobil headquarters for Houston. So that building makes it a little bit easier since the building is completely vacant.
And it's a big building too. It's a 1,200,000 square feet, 45 stories. That's a big piece of vacancy sitting there. And it's been vacant for, I think, 8 years or something.
Yeah.
At least. Yeah. So that's making something happen there that's positive would be good. And, it was built in 62. Humble Oil and Refining headquarters in 62, but it's it's a cool building in some way. People that like the architecture of it and everything, and it'd be really good for downtown Houston to have something happening there.
Yeah. It's interesting. The Petroleum Club was in that building, and it's everything is still there from when the Petroleum Club was there. It's pretty interesting to look at it.
Oh yeah. I've been there, but it's been it was a long time ago. I think the Petroleum Club took the top 2 floors. And
right.
That would be.
I'll send you some pictures of it, and you can post them if you want to.
Yeah, I don't know the New York group that bought this. I don't know the people there yet, but I'd like to get in and look around. It's kind of like going through ancient history.
It is very much going through ancient history. I was in there a couple of weeks ago, and it's definitely very interesting. Like I said, I'll send you some pictures.
I'd like to see it. See, the other one we talked about was 800 Bell, 5555 San Felipe, and you mentioned the Esperson with
Right.
Dougal Cameron is in the process of doing that. We have done an interview with Dougal, and that we should be carrying that here pretty soon, I hope. And so we'll figure out what's going on there. But you're right. He's gonna kind of do a mixed use. Esperson was built in 1928, ornate, great thing downtown that you can't miss it. You just look for the most ornate building in downtown Houston.
Yeah, you can see it in my right behind my well, point the right way. You can see it right behind my window, looking out right now.
I see
that's,
it.
That's the top of
it. That's great. You now, where do you guys have your offices, Wade?
We're at 1,000 Main.
1,000.
So I look right out on the Esperson building every day. It's, Dougal's a very smart guy, so I'm sure they will be very successful with it. I've heard that they're going to convert about 100 units to start with, and then see how it goes from there. So, I'm sure that it's a beautiful building, as you said.
It's really cool. 1,000 Main, if my history's right, and this is recent history, I think that a couple of years ago, you and your associate there at Avison Young, Marty Grizzle, won the Deal of the Year award for the 1,000 Main building.
Right. We were
great big lease.
We were lucky enough to renew Shell Oil and obviously did that deal with Tim Relia and Joe Petty. And it was, I think the reason it won it was just very impactful that Shell decided with their campus out west that they would continue to maintain a big presence. And this is their trading group that's here and stay downtown. I think most of the traders like the flexibility of being downtown, like all the amenities of the building. This is a great office building as well too. It was built earlier. It's 20 years old now, but the ownership group is an open-ended German fund out of Germany that spends a lot of money on their buildings. We've completely come in and done an upgraded tenant lounge and top of the line fitness center, and pretty much done everything we can to continue to compete with the newer construction downtown, and have done a good job with it. So we did that deal, and then we're just about to announce one and press release. I'll make sure and send it to you on another 100,000 footer that is moving to the building as well too. So this building has seen a lot of traction, and we've been very fortunate to make a couple of leases here. Yeah,
I mean, in this day and age, of course, 100,000 square feet is a rarity. We're just not seeing. We're seeing more activity than there used to be. But like you said, a lot of times these companies are, well, I used to occupy 100, but all we need now is 75,000 on our next lease, or 50,000, or something. So when you talk about 100,000 square foot lease, that's very significant. So congratulations.
Well, thank you.
Press release first.
Yeah, I'll do it. We're working on trying to get all the approvals on it right now, so I'll send it out here to you very shortly. It's the good thing or interesting thing about this company. It's one of the ones that I mentioned to you that was one of the rare companies that is expanding, and this group has been growing pretty significantly. And so they've gone from about 60,000 feet to right at 100,000 feet.
Wow.
And have plans to expand a lot more.
Yes.
So
that's fantastic. Well, that's good news for downtown. That's good.
Yeah, definitely.
Yeah. We need that downtown good news. During the COVID was pretty tough in a lot of ways. And like the merchants, the guy that runs the deli and all those guys, everybody, all your customers go away, and you feel sorry for those people. It's gone. But
it's
a lot of good things are happening.
The vitality reports that we put out a vitality report that shows people coming back, and then so does Castle as well. And Houston is, I guess, second in the country behind Austin and people coming back to work. So the downtown, I missed, I guess, 2 days for COVID, and then was in the office every day since then. But it like you said, all of the retail folks have been struggling for quite some time. But if you are downtown now, it's a totally different story with quite a few people walking around, bustle back in the tunnels during the lunch and breakfast hours. And, the feel is a lot different. Thank goodness it's getting better now. Now, Fridays are still a tough day. This flex work schedule, I think, is definitely changing things on the office environment. It'll be interesting to see, what that does to us long term.
Yeah, well, Of course, downtown has the new Heinz building, which just opened, a 1 million square foot building, the
Right.
Texas Tower there at Texas at Travis, and that was a pretty monumental thing happening last
Yeah.
year.
Yeah, it's it's a great building. I mean, it's Heinz has done a good job of blending more of the hospitality side with the office, which I think is what employees want, and therefore employers want, because they're trying to give their employees, what they need to feel productive and valued, and so that building has done a really good job. They're in the process of finishing construction on a couple of restaurants on the ground floor, a bar that'll be part of the lobby. They've done a really nice job on that one. But yeah, downtown, obviously that building just opened, and then 1550 on the green that Skanska's building, will be delivered here, later this year or early next year. So we've got still 2 new developments that are, coming into the downtown market.
I was wondering about that 1550. Just happened to be talking to somebody about it. What's it's developed by Skanska,
Right.
and it's right near Discovery Green, and it's under construction. But I guess they've topped out. It looks like it's substantial amount of work has been completed.
Right.
What do you know about that building?
Well, it's a smaller, where Heinz is coming in with Texas Tower over 1 million feet. Skanska's this building is a little over 380,000 square feet, so it's much smaller. Like you said, right there on Discovery Green. I think it's going to be a fantastic addition to downtown. The activity level in those buildings, that's the struggle for downtown, is when the new buildings are coming in. That's where the bulk of the leasing activity is happening, and all the rest of the buildings downtown are struggling with trying to figure out how to add amenities to compete with it. And we've seen the biggest price differential in the history of Houston, from the Class A trophy buildings to even the Class A lower tier buildings, Class B, Class C, and the delta doesn't seem to matter. Those buildings are leasing in the mid to high 40s, and the next tier down, even tier 1 office buildings, are leasing below 30 net. So we're seeing a 30% price increase to be in one of the biggest buildings, and people, employers still want to pay that difference to have their employees be in the nicest building. So that's it's left a lot of people scrambling with, I'd say scrambling, but it's really, they've just decided to add amenities to their buildings to compete with it. Allen Center, Houston Center, it made massive
Hundreds of millions of dollars.
Yeah.
Fortune,
Yeah, they've done a great job with it. And they're making deals. So obviously it's money that's well spent, because they are making deals, but the delta has not shrunk yet, where those buildings can continue to increase their rental rates. And that's a function of demand in the market. Until we see increased demand, it's going to be interesting to see where it comes from. We still have great job growth. I mean, last year we did 76,000 new jobs. Greater Houston Partnership's projecting over 60,000. That's kind of been the barometer. When we have job growth over 60,000 new jobs, that's a banner year for us. We usually see a lot of expansion in the office market. And so, time will tell. So far, employers have been trying to do it with less office space. But, as we see with people coming back to work in Houston, hopefully that's going to translate into, future absorption.
And that's why getting people to come back to work and making the workers want to be there is pretty critical to a lot of. So I'm glad that Houston and Austin are doing good at that. I think some of the leading tech companies said, "Hey, you guys got to come back to the office 5 days a week." They want people in there collaborating and stuff, but people kind of got used to it during COVID. And so like you say, Fridays probably. I think the 4-day work week is just around the corner. Going back to the amenities for a second, when we were talking about the new Skanska building next to, Discovery Green there, that seems kind of, when you're talking about all companies wanting to have all these nice amenities and, places to park your bicycle and fitness rooms, et cetera, et cetera. But having the park, Discovery Green Park, across the street, that seems like that's a pretty good built-in that Skanska is bringing to the table.
Yeah, absolutely. Skanska really was kind of on the forefront of amenities in downtown Houston when they did Bank of America. Bank of America has got understory underneath it, which is a really good food hall that they did for the tunnel level. And then they were the first to kind of integrate the tunnel downtown below with the street level. And so they, with Common Bond and several other restaurants, they've done in that building. So I even though it's a smaller building, it's going to be on a bigger scale as far as amenities with, where the building flows out into the park. So I agree with you. I think they've got a leg up there, and it's not that big of a building. So, let's say that 385,000 feet. So, I guess it's pretty good size, but not for a downtown building.
Yeah. Usually you think, hey, 40 stories, 1,000,000 feet or something.
Yeah. Well, so
maybe they hadn't built it. Maybe Skanska should have stepped up and gone, as big as Bank of America is.
Well,
the Bank of America is cool the way it has that wide stairs that come in, and so you can see the tunnel level. It's very inviting. You don't feel like you're going down in the pits down there. They really bring the ground level up to the lobby in a great way. I agree.
Yeah. The going back to what you were talking about in the conversion over to multifamily, I think one of the other things that Houston is going to have to deal with, and you can look at it when you look at the downtown buildings. Unfortunately, our buildings aren't old enough. They're not like New York or Chicago or Boston, where you've got a bunch of architecture that, can make a conversion into a multifamily that is unique enough that people are going to want to live there. Most of our buildings were built, in the 60s and the 80s, for example, downtown, other than the older ones that have kind of already gone through a conversion. So, we were building boxes to be very efficient in the 80s and to, lure the energy companies and engineering firms who were looking for very efficient space. So they're not very unique, and they're, and if you look at Houston in comparison to Dallas or Austin or other places, our buildings are a little bit older, but we still face a uniqueness aspect of it that, it'll be interesting to see as these conversions go, if people want to live in the type of construction that we did in the 60s through the 80s.
I know. You look at it. I would say one thing, you do get some good views if you're at 30 stories, 40 stories up, that you can't get, it's hard to beat that. It's hard to beat that.
Sure. Yeah, 55 San Felipe is going to have some of the most amazing views you can imagine on that thing up there, 35, 40 stories up in the air. It's going to be unbelievable.
Yeah, and all that neighborhood there, the Tanglewood neighborhood, the old neighborhood with a lot of trees, and you just probably feel like you're overlooking, the park or something. It will have A+ views.
Yeah, the cachet of living right there too in that neighborhood, I think, is going to be very appealing to a lot of people. I think.
I think it's good. Speaking of, I kind of consider that San Felipe and Tanglewood a little bit different of an office market. Not much though, from maybe it is the Uptown Galleria. It's kind of on the northwest edge of the Galleria, I guess, Galleria right. Uptown. But the Galleria Uptown, they have, they've lost some tenants, and I think Apache is leaving, and Bechtel, and some others that you could probably list, but I think that's, and I don't know why. I don't know why. But to speak to me about the weakness of the Galleria Uptown office market.
Well, I don't think it's I don't think it's a weakness, but I do think that there's, the Yogi Berra line of nobody goes there anymore. It's too crowded. It's a little bit of has happened with the success in the Galleria. The mobility and the traffic, even though that they've done quite a bit to help that with the rail running through on Post Oak and things like that. It's still difficult to get in and out of the Galleria, and so I think some of the larger companies have, found efficiencies out further west and cost savings that, made them move out there. And that's been a trend for the last 20 years in the Galleria. Bigger companies have moved out. Most of them have tended to go west because there have predominantly been energy companies. And when that happens, then the Galleria backfills with smaller to mid-sized tenants. And so when you lose an Apache or a Marathon, the backfill of that can be several years. Doesn't mean that there's not plenty of tenants that want to be in there, but when you take one tenant out and it takes you 30 or 40 tenants to backfill that space, it just takes time to do it. And so the Galleria has, I think it's been a lot of that has been a function of the success that they've had and people wanting to live in that area. I mean, the Galleria is, while downtown may be the central business district, the Galleria is really kind of the hub of the city. And so there's a lot of people that want to live and work and play in that area. And so it's just going to have to, we're going to have to backfill it with smaller tenants. And it's generally people in those neighborhoods that you mentioned that are they're the CEOs and want an office close to where they live. So I think it's more of a timing.
What about the Post Oak Central? Apache, I think, is leaving Post Oak.
Right.
It was a Heinz building a long time ago in the 70s, I guess. Heinz
Right.
project, 3 buildings, and pretty good size piece of acreage there, really. They actually have St. Augustine lawn out front, big.
Yeah.
What do you think is going to happen to Post Oak Central next?
Well, there's a lot of people that have, and a lot of things that they've looked at to say, how can we develop that area? Is there alternative uses? Not for the office product. Obviously, the office product is fantastic right there with a great location being on Post Oak. But I think at some point, you mentioned that big lawn out there. There's a lot of different development opportunities that can happen there. And so I think when the time is right, and I think a lot of what has to do when the time is right is when do the lenders get back into this market and, lend money for developments and even office purchases, then I think you'll see that one look way different. I don't really have any real knowledge on what they're doing in there, but my guess is that development will look a lot different in the next 10 years from now, probably than the way it does right now.
Come up with redevelopment of some sort. Yeah, it's classic. And also thinking about the energy corridor. What do you think of that submarket, Wade?
Well, it's, I moved here in '93, and the first building that I ever leased was in that submarket. So I've had buildings out there my whole career, and there's a lot of swings out there. But with the population that lives out west, especially with the engineering groups that live out in that area, I think it's always going to be a hub for the engineering side of the energy business. And a lot of those folks are going to continue to want to be out there and be closer to their home. And so I think it's going to continue to grow. One of the interesting dynamics of this new world we live in is, all of the mixed use complexes that are happening, and they're great. I live in Sugar Land, and I like to be close to where I can work, live, and play, and so with the renovation of the Conoco campus that Midway is going to do there, and then with the success of City Center, and then everything that Metro National and Moody has done in that market, I think it's very attractive to people to want to live there. I don't know why you wouldn't want to live there. So I think these future projects and mixed use projects, big ones that are coming out, are going to continue to attract people and tenants, office tenants that will want to be in that area. So I think it's going to continue to be successful.
Well, I know you're very familiar with the former Exxon chemical site that DART organization bought, and their plans, their renderings for redevelopment were pretty dense, mixed use, hotels, everything. And of course, a lot of things happen. A couple of big oil crashes for one thing, and other economic things happen to the economy. What do you think about that project? I think it's called Republic Square now, if I'm not mistaken.
Yeah, Republic Square. Yeah, well, we were obviously involved and helped them buy that tract when they came in, and we were pretty far along in the redevelopment of that site into a mixed use as well, and then we had a little kind of an oil crash there that stopped all real development in that area, and then followed by a pandemic, and then followed by whatever you want to call what we're in right now. So they've got plans at some point when the economy is right to come in there and redevelop that, and it's a great location, and I think it's will do very well once DART feels comfortable that the economy is in the right spot to go in there and develop it. And right now they've done a good job of coming in there and leasing that up to more of the tech type tenants, where they were giving them flexibility short term. They converted the building that was there was as Exxon was planning their move out in Springwoods. That building, they did a lot of the office and set it up the way the new office environment was going to look. So that building wasn't an early 80s style building. It had been completely renovated with what Exxon was going to do in a large portion of it. And so they've found tenants that wanted to be in there. So, I think they're doing pretty well with what they've got, but certainly not what their long-term plans for that site would be.
Yeah, but the Exxon move was like an earthquake. It changed a lot of different things. And 800 Bell in downtown, for example, that poof, they're gone, but finally, what's worked out of it? We finally got Exxon to move its headquarters to Houston, where they should have been from day one. But so they're moving out of Irving there in the Dallas metro area and coming to Houston this year, I believe. The remnant of their headquarters is not huge, but it's the influential leaders, maybe a couple hundred people, but they're coming to the Springwoods Village site, which I think is now called City Place, kind of south of the Woodlands, but it's pretty far north, but near where the Grand Parkway and Interstate 45 connect up there. But that's good news. That's a good piece of economic news. You always feel better when you got another Fortune 500 company coming to your town. It's always good.
That's right.
And we've got, I guess that we've got the Skanska building next to Discovery Springs coming on, and I think Metro National's got a new building on the Katy Freeway, not far from the Energy Corridor. And then I believe Midway's also got a couple of buildings there at the East River redevelopment on the edge of downtown, eastern side of outside of downtown, but not very far. The redevelopment of the Brown Route. Have you? I think they got, I believe it's this correct, 175,000 feet. A couple of not humongous buildings, but have you been out there to look at that project?
Oh yeah. You're right. There's two buildings. One's a little over 100,000 feet, and the other one's right at 74,000 feet. So yeah, both of those building in East River. I think all of those mixed use projects that are, the TMC Helix Park, the plant or second ward that they're calling it, all of those are really going to transform the way Houstonians move and where they live and the amenities and things around them. And that East River project, is certainly going to transform the whole Edo market. And it's, Midway's doing a good job with that thing. I play golf, but I haven't gone over there to play the new golf course yet. They opened it, so I need to go over and do that some night. Kind of neat that they are open that 9-hole course that you can play, at night. So those buildings, I think, are going to do very well. That's kind of been more of a tech type feel to what they're doing in there and the construction in there. And it's, it's got a great vibe in there. I like going over there for sure.
Yeah, we were talking about East River, and I think East River's got a lot of future to it. And that's those. I think those four are the. If I remember your materials and your report is, which is always very good. I know Ariel Guerrero and does a great job with you guys on research over there. But those four buildings are, I believe that's about a little over 1 million feet. So we're not like building a ton of new office space. So maybe equilibrium will set in pretty soon, and we'll get back to normal and everything. And I guess just last question. Thanks so much for your time, Wade.
Sure.
But looking out the future, here we are. We're still early in 2023. What do you see going on with our office market? Which I hate to say it up front, but a lot of people, some of the reports say this has got the most vacancy of any market in the nation. I go, oh God, that's not a real upbeat intro, but anyway, what do you see? How do you see things happening for the rest of the year, sir?
Well, when you say the most vacancy, when Enron went out, we had the largest contiguous block of vacancy in the United States, and they were projecting a 20-year lease up, and Enron came in there, and that space was done in less than 18 months. So, Houston has a unique ability to rebound faster than any market I've ever seen. And yeah, you're right. I think we've got a few tough times ahead. We've got a lot of ownership that is trying to figure out what to do with their buildings. And I mentioned it earlier, until the lenders get back in the market, and that stimulates office sales and development. We may be in a period of kind of a static state here for a little while, but I'm since '93, I'm constantly amazed at when things go bad, how quickly they do. And then I'm constantly amazed when they turn good, how quickly Houston rebounds. And, Houston has always built itself to be a little bit counter-cyclical to the rest of the United States. And as the recession or whatever, like I said, you want to call it, that we're in this period in now, I could see Houston benefiting from that. And so I think I have probably a little bit better outlook than a lot of my counterparts do, just because I've seen how quickly we can turn. And as we're watching deals, we're beginning to see some expansion. The first stages of the energy sector are doing well now. The engineering sides are expanding. LNG folks are expanding. So, there's some good signs out there that if they can continue to grow legs, could help us out of this.
Okay. Wade Bowlin, Avison Young, great talking to you today. And we'll check back later in the year and see how we're doing, man.
Okay. Well, Ralph, thank you so much for having me. I appreciate it. Always good to talk to you.